6.2 billion. That's what France-based Vivendi spent on US Filter in 1999. 5 years later, US Filter was sold off to Siemens, that German company, which ultimately became Evoqua and is now part of Xylem. That company, Vivendi, was rebranded as Veolia in 2003 and has since evolved through acquisitions of companies like Suez, which had also just rolled up GE Water, which cemented Veolia's position atop the water industry with $18.8 billion in annual water revenues. That's my history lesson for the day. And there's even more to unpack within these companies. Perhaps we'll do that next time. I am Reese Tisdall, and this is The Future of Water, in which we talk about all the ways in which companies, utilities, and people are addressing the challenges and opportunities in water. This is episode 128. That's 128. And I have a feeling it's going to be a good one. That's because we've had a lot of practice. There are 127 more of these before this, so give them a listen. But also, more importantly, today I'm joined by Bluefield senior analyst Antonio Del Olmo out of Valencia, Spain, to unpack our latest analysis of TAQA's $1.2 billion acquisition of Spain-based GS Inima. Yes, we've talked about this previously on a podcast, Antonio and I, that is, but only speculatively. This deal underscores TAQA's Middle East roots, but also this conversation, we're going to talk a little bit about desalination and water as a core pillar of TAQA's global strategy going forward, including in markets such as Europe and Latin America. Why am I excited about this topic? Because it kind of gets at some of the key questions shaping the water industry and strategies and trends. What does TAQA gain by acquiring GS Inima and its global portfolio? How does exposure to Europe and Brazil shift the company's risk profile? And what does this deal signal for competition? What does it mean for the other companies in the water sector that TAQA is now running about the world with a significant backlog in countries like Brazil and Spain and other markets? I look forward to the conversation with Antonio, but before we get to him, you're going to have to bear with me just a little bit longer because one thing caught my eye this past week. WaterBridge Infrastructure's planned IPO, actually it happened yesterday, day before this recording. It highlights the rising importance of water in the U.S. oil and gas sector and economics. With a dominant position in the Delaware Basin and long-term contracts, the company sits at the center of what we call midstream water markets, which Bluefield has forecast to reach $156 billion by 2030. While the financials show growth and strong cash generation and all the other selling points of an IPO, the deal does make me think of the sector's broader tailwinds, soaring natural gas demand because of things like artificial intelligence, as well as EU demand, given what's happening with Russia and Ukraine. And then also, lastly, more importantly and impactful to the water sector, are tightening disposal constraints in places like Texas and the Permian Basin or New Mexico. So a couple quick takes. Reinforcing the point, U.S. midstream water is projected to exceed $156 billion by 2030 combined, 2025 to 2030, or approximately $28 billion per year in water-related services. Let's stop and think about that for a second. $28 billion in 1 year for water management. 2/3 of this water management is tied to the Permian Basin in Texas and New Mexico, which reinforces WaterBridge's strategic positioning where it is. The Permian is also home to other big midstream water companies like Select and Aris, which was actually also just acquired recently. Then lastly, I would say the growing disposal constraints, seismicity concerns, meaning causing potential earthquakes, and regulatory pressure have and are accelerating investment in recycling and pipeline infrastructure to move water around to the different well pads or to treatment facilities or disposal facilities. So it's been a minute since upstream oil and gas hit the fan, but it's high times right now. I think administratively in Washington, it's a favorable climate. I think if anything, there's definitely some consternation in terms of economic outlook. So I think everybody's riding this wave as long as we can. But I would say, just from my own experience in analyzing these companies and working with a team of analysts that do, the industry, midstream water management segment, and specifically has matured and they seem to have gotten more control. And it seems a little less, what I would say, crazy than it used to be in 2014, 15, and even from 16 to 2020. So with that being said, let's get to Antonio Del Olmo and talk a little bit about TAQA, GS Inima, and some M&A. All right, so I'm joined here by Antonio Del Olmo. Antonio, welcome back to the podcast. How's it going?
Hey, nice to be back after the summer.
Well, speaking of summer, is it still summer there? Like temperature wise, what's the story in Spain?
Well, it's pretty hot. I mean, yeah, it's pretty hot. I'm still taking, going to the swimming pool every now and again. So you can imagine it's pretty hot here. Yeah.
Yeah, I think we've moved beyond swimming pool weather here, which is actually nice. It's the nicest time of the year in Boston, if not anywhere, where cool mornings, warmish days, but not quite good enough for swimming pools. I don't know who has an outdoor swimming pool in the Northeast of the US. In any case, that's a whole different story. So, all right. Well, that's my weather check of the day. I forgot to do it last podcast, but that's where we are. So, shout out to all you weather watchers. And that being said, let's talk a little bit about what you've been up to. So, it looks like, and this is a bit of a refresh because I think it was in midsummer, there was some speculation that TAQA was going to buy GS Inima, the Spanish engineering company, quasi Spanish engineering company, because they were owned by a Korean company. A little strange there. But Abu Dhabi's TAQA acquired it for $1.2 billion, I believe. I don't think it was euros. I think it was dollars. But TAQA has long been known as a power and desalination player in the Gulf or Mideast states. And GS Inima has worked there as well. But this is an interesting acquisition because it means a lot for TAQA, I think. And so you've done some research on that. So maybe we should go through some of the details about the deal. What does this mean strategically? What does it mean geographically? What does it mean competitively? So with that being said, Antonio, who are these companies that are involved in the deal? Give us another refresh on what we're talking about, and then we can go into some of the details.
Well, as you said, TAQA is the Abu Dhabi National Energy Company. It's a state-owned company, 100%. Best known for power generation and desalination in the Middle East, right, in the Gulf. Until now, water was a secondary function to its portfolio, more or less. Not anymore, obviously. GS Inima, on the other hand, as you said, it's a Spanish company. It was funded by a construction company in Spain, and it was sold in the early 2000s to GS, Engineering Construction Group, Korean group. And GS Inima has spent decades building, financing, operating water projects all over the world, from diesel plants in Spain and Portugal, very recently, by the way, large concessions in Brazil. I think they also manage a waste diesel plant in Chile, in the Atacama Desert. So together, both companies are combining like the skill, power, and water, of the Gulf with GS Inima's international projection and expertise, and O&M expertise.
So I agree. I mean, I think, well, whether it be Inima, and I know you're tired of hearing me talk about this, probably everybody in Bluefield Research is. I love the Spanish engineering companies because I think they're super interesting, both what they're focused on. There has been an ebb and flow of their success. I don't know of another way to put it, over the past, maybe 10 to 15 years, sort of big build out, crushed by the Great Recession, building out active in renewables. But like you said, Inima is actually a really interesting company because they do have a global footprint. In fact, if I look at your numbers that you've put out in some of the research, only is it 4% of their revenues are actually out of Spain? Is that really what we're looking at? So it's actually, that's a smaller footprint. Their biggest chunk is in a place like Brazil. So the fact that TAQA is coming out of the Middle East, Does that mean they're going to be operating in Spain or other parts of Europe or Brazil for that matter? Is this really what their long play is?
I believe the TAQA was, there are two sides of the story. First, TAQA was wanted to enter the water market and has been trying to enter the water market for quite some time. And then there's the other part of the story is that they've been trying to enter the European market for quite some time as well. They even tried to buy an energy company here in Spain, which it was the deal was fenced off by the Spanish government, which didn't want Emiratis to be here in Spain at all. So they've been after this deal for quite some time. I think you mentioned summer. I think this deal we have been talking about for 2, 3 years. I don't know, for a very long time. So yeah, I think TAQA right now, their position in the Gulf, gets very reinforced with the deal, and they get assets in Spain, Portugal, Brazil, Chile, like I mentioned, all over Latin America. So effectively, yeah, I think TAQA I know for a fact that they were already trying to build some energy plants in Morocco. So yeah, I think that we can consider them then a global player, and both in energy and water.
Yeah, and I suspect it also helps that I think they've, if I read correctly, they've worked together in the past, right, on desalination plants.
Yeah, they were in a JV. There's a diesel plant. I don't remember the name by heart in the UAE, and they have a joint venture. I think it's TAQA 70%, GS Inima 30%, something like that.
Yeah, and I think, and I would just correct myself because I'm just looking back at my notes. It wasn't revenues as far as where GS Inima geographically focused. Like I said, 4%. I think that's their backlog, right?
Yeah. So the thing about Brazil is we know that the country is one of the largest growth markets in the world right now, right? Right. So they passed that 2020 sanitation law, which opened tenders to private players. And that makes it very attractive for many companies, not only GS Inima, but a lot of other water utility and engineering companies are pushing to get into the country right now.
Do you think that once the deal was consummated, do you think that the focus, maybe this is a simple question, is it global in nature and therefore TAQA is going to keep all of these assets and positions? Did they look at it, hey, this gets us into Europe? You'd mentioned they had tried before with a power company. It's just, I don't know, it feels a little strange to me that TAQA is now going to own uh, a big chunk of concessions in Brazil. Does that make sense? I mean, or do you think that they might spin one or some of these positions off now that they own the whole pie?
Yeah, I've been thinking about this as well a lot. My impression is that if the deal has been in the making for 2 years, more or less, let's say 2 years, GS Inima, the move that they made to start bidding for contracts in Brazil is pretty recent. I mean, we're talking about precisely that time period, like one year to be 1 year, 2 years ago, and they've been awarded contracts very recently. I don't think they would have done that move if it would have not been something, at least that they discussed with TAQA, with the potential buyers, right? I guess, I mean, that's my impression. So it wouldn't make sense to me that TAQA, after being negotiating for all this long, and knowing that GS Inima is trying to get into Brazil, now suddenly goes and sells everything, right? I mean, wouldn't make a lot of sense to me. But I mean, it's a possibility. But I think we're looking here at a global player. It's not only TAQA. I think that the Middle East companies are aware of the importance of water companies, and they're investing very heavily in water. And this is TAQA's move. This is their chance to become someone relevant in the sector. They're far away from companies like Veolia, but I think we should consider them a relevant player going forward.
I think everybody's far away from Veolia at this point. I don't know, you haven't heard the intro because you came on after the fact, but I was sort of unpacking the history of Veolia and what it all means for them. I mean, Veolia, their water business is what, about 18 and a half, 19 billion US dollars per year. I think that's correct.
Veolia is in another league. Yeah.
In another league. And I think, looking you're and I think this, to your point about, what was TAQA buying, and correct me if I'm wrong, GS Inima has about what, $350 million in annual revenues.
Yeah, that's it.
85% of that is concessions. So is that really what they're buying? I just think it's interesting to see that that's what they're doing, because I get the desal piece, right? They understand desal, and the desal markets and opportunities are few and far between. They're pretty lumpy, large scale, particularly outside of the Middle East, right? The Middle East, there's like a steady build out in markets like UAE, obviously. Saudi Arabia is by far the largest market in the world for desal. But then you start getting into Spain or Australia, definitely the US. I wouldn't count on that for a big, large scale desal market. It's pretty lumpy, pretty tough business to be in. So, no, I think it's super interesting. And I mean, do you have any idea who else was interested in GS Inima? You think?
Well, according to the press, we do know the Quebec Pension Fund was interested at some point. We don't know when they dropped out of the run to buy GS Inima. We do know as well that at some point, Aqualia and Veolia were interested in the process. Again, we don't know when they decided not to continue. But yeah, I mean, at least those. And we don't know of other players, but one can only assume that any player, like I wouldn't be surprised if Aramco or the Saudi Water Authority was also trying to get into GS Inima and could at some point, or Marubeni for that matter.
Yeah, Japanese trading houses are always they always take off little slices. Rarely do they take the whole pie. So you would think, I know they definitely do that on desal plants too. In the Middle East, they'll take a 5-10% stake. As far as companies, the big companies.
But it would have made sense for them to buy. They bought AGS in Portugal. So buying a company with a big portfolio in Brazil makes sense, right? And they have several concessions in Chile as well. So it would have made sense.
No, I think that's a fair point. The Japanese trading houses, they are interested in those Latin America markets as well. They've always, whether it be Mitsui, Marubeni, like you mentioned, they're companies that have been sort of circling Latin America, let alone the rest of the world. That's a really good point. Who are the peers to, whether it be TAQA and or GS Inima? Who have you compared them to in the research you put together?
I mean, like you said, the Saudi Arabia state-owned operator is by far the largest one. Then we have Aqua, which are those two are the leaders, and I mean leaders by far. I think they have a diesel capacity of about I think it's 6 to 7 million cubic meters per day. And then there's Veolia with 1.5, I think 1.6, 1.5. So ENGIE Group, owner of Veolia. So TAQA right now with the acquisition now stands fourth with about half of Veolia's diesel capacity. So they could be comparable to either. You could look at obviously Veolia, but you can they're similar to Acciones portfolio in the region, more or less. That would be the most immediate competitor that they would have there.
Yeah, I think it's been a minute since I looked at the details of desal. I don't know, and I don't know if you dug into this, how much of the facilities or assets in the Middle East for TAQA are, like you said, they're really a power and have historically been secondarily a water player. But how many of their facilities are what we would call integrated water and power plants, meaning they're both, right? A desal and a power plant versus just a standalone reverse osmosis.
No, all of them. All of them. Actually, the JV that they had with GS Inima was precisely that, right? It's a solar powered diesel plant, so it made sense for them to be like the part of the contractor, in charge of the energy and energy design and all that stuff, and GS Inima being the water specialist, right? And that's kind of how the contracts that they actually have been being configured from their side. So they have been a partner to these JVs, and they have always been there because they had the expertise in energy.
No, that makes sense. So why is GS, the Korean company, getting rid of them? Why the divestment?
Well, I'm not going to say rumor has it because they did had an incident in the I think it was the 2010s in the mid 2010s with a parking. I think it was a parking lot. They had a big liability within the company, and they were under some financial distress. Ever since, there has been talks of trying to divest in GS Inima. I'm not sure it has to do with the fact that Inima has been insolvent or they're not an attractive asset. It's just the fact that they're probably the asset that's easier to sell for them, which is ironic because they took like 8 years to do so. But still, I do think it's an attractive asset, and I don't think it has to do with Inima. It has to do with the financial situation of the holding company.
Right. Yeah, I mean, it's interesting and sort of maybe back to where we began, or at least one of my earlier statements about the Spanish engineering companies. It's interesting. There has been a lot of changing hands over the past, 3 to 5 years. Some of it self-inflicted, some of it, like whether it be TAQA, they owned by the Vinci Group,
Hmm.
the French group. I was actually going back through some private equity analysis. Valorisa,
Yep.
yeah, they're owned by a private equity firm now. Is that correct? Or someone else? I can't remember exactly. I was just looking at it. So they've changed. And then you've got Abengoa.
Cox. Yeah.
Yeah, that's Cox, but that's subsequent to their going bust. Who else am I missing? Anybody else? Cadagua, they've been steady under Ferrovial, no?
Yeah, they are. Well, I mean, we do have Indaqua that bought Hidrogestión here in Spain as well. Indaqua being a big Portuguese player, they bought Hidrogestión in Spain as well. So yeah, there has been a lot of movements.
Yeah, this is what I came across. I don't know if this is true. It's Valoricia de Servicios Medioambientales, Valoriza Agua, owned by Morgan Stanley Infrastructure. Is that right?
Could be.
That's the case. I think I have that in my notes. I was just looking at this yesterday for something completely different, and I think that was October 2023. I'll look back into that detail. So sorry if I'm wrong. I apologize to all the listeners out there. But point being is there has been movement among these Spanish companies because, like I said, there are these ebbs and flows in construction, European markets, desal markets. Um, a lot of them, like I said, were heavy in renewables, and they've been kind of beaten up a little bit by that. I know that's part of Abengoa's problem as well, I think. So it's interesting to see now that Anima is changing hands. Well, is there anything else to add? Anything that jumped out at you that you thought was interesting about doing this analysis now that the deal is closed?
Yeah, I mean, I don't know about you, but the fact that this deal was closed only for 10x.
10 times EBITDA.
Yeah, yeah, yeah. That made me wonder because every deal that before joining Bluefield, every deal that I had come across had been like 14, 15 times EBITDA, especially in the water sector. So that made me wonder why GS Inima was valued. I mean, I'm not going to say badly. 10x is still a big chunk of money, but yeah, and when you look at the backlog and where the revenue comes from, you notice that they're very concentrated. Their market is very concentrated. 2/3 of their revenue comes from the UAE. So that makes this acquisition only interesting for people working right in the UAE, and for TAQA that makes sense, but maybe not for other players. We mentioned Marubeni. Maybe that's a liability that they did not want to have, right? And the Brazil issue, obviously, the 2/3 of their backlog being from Brazil, you're exposed to Brazil's politics, to currency issues, instability in the region, which has been more or less the general tone there for the last 20 years. So What I mean to say is that maybe some of the runners to buy GS Inima just dropped from the race because of this.
Yeah, Brazil is not for the meek. It is. It's a tough market. There's lots of ups and downs. It's costly. There are a lot of, and like you said, politically, even they're going through their own political nonsense right now.
Or maybe it's just like we've been talking about this internally as well, the interest rates, right? Money is more expensive right now. So maybe it's just that valuations cannot get as high as they did some years ago.
Yeah, and that's something I've been looking at, and this is it's separate discussion, but looking at the role of private equity firms in water, what do they own? It's in the news every day where partly because of whether it be cost of capital. I think some of these companies are kind of in a bit of a tough position, meaning that they buy with debt basically, and money's expensive and they can't do it. And there's no IPOs. We're not seeing, and they're very few in water, there are very few IPOs. There's only a handful that you see, even over the past 5 to 10 years. So yeah, it's like I said, it's a bit like I think it's a risky proposition if you pin it on Brazil, but if you're in the Middle East, and there are only a handful of like real, when it comes to water, engineering companies, solutions providers. Middle East is a pretty consolidated market, and it's very centralized, right? So those who are, it's not the utility ownership and systems is not is consolidated. So it makes it tough in that regard. It's not sort of a wide open market opportunity. So, well, I think it's super interesting. Like I said, we've been looking at this for a long time. And the first report we ever did at Bluefield, the big report was released in 2013, was a desal report looking at ownership of desalination assets, net equity positions. I remember looking at TAQA then. It's interesting to see what they're doing now. It's interesting to see. And I feel like they've been talking about this, like you said, for a while, of getting out of the Middle East, going further and farther afield. And maybe is this their big jump, or a manageable jump for them? So it'll be interesting to see what happens in places like Europe and or Brazil with their strategy. With that being said, what else you got working on before I let you go? What are you digging into research wise?
Well, we just published the Germany country profile, a nice one for anyone working in the region. So it gives a good outlook of the German market if you're interested in that.
Germany's a tough market,
It is.
not consolidated. It's highly fragmented and it's really hard, no?
Well, yeah, but that happens to be the case for all of Europe, right? Every time we start speaking of a company, we always start, well, yeah, well, Belgium is very fragmented, France is very fragmented. There's lots of localities. The market is very hard, very local. That holds true for a lot of parts of Europe, Germany as well. Yeah.
I think Germany's interesting. I mean, because the other thing is like culturally, they all do things a little bit differently across the European markets. But you guys, the Europe team, you guys have put together a nice string of country profiles and reports, whether it be on, Germany's one, France, we've done Italy, obviously we've done Spain, we've looked in depth at the UK, Benelux.
Right now, I think we will do Poland by the end of the year, probably Romania as well. But right now, what we're working on very intensively is the Europe stormwater report. That's a big one, and we would like to have it published by the end of the year as well.
Yeah, there are a lot of, I'm not going to lie, there are a lot of reports coming out of Bluefield. It's probably the biggest stack of large reports coming. We've got midstream oil and gas coming out in coming weeks. We've got municipal water or wastewater reuse that's coming out. I know that's gone through production. That's pretty close.
PFAS here in Europe as well.
PFAS in Europe, stormwater there. We've got a trenchless report coming out in the US.
Energy efficiency as well, yeah.
That's just Europe, right?
That's Europe. Or is it? No, I think it's global. I think it's global. There are there are business cases about US as well and all around the world. Yeah.
Yeah, so that's more digital focus. That's coming out of the Europe. You're out of the Barcelona office. I know that's where it's being worked on.
Mm-hmm.
And then there's we're digging into heavy industry in Canada right now. That won't be a long form report, but there's insights happening there. And then just a string of other research notes. I know we're looking at something for water management and mining right now, particularly in Latin America. I think the kick for that was Anglo American buying tech, and then they own desalination assets for mining in Chile. Next thing you know, it's sort of spiraled into something else, and talking about waterless mining for Vale in Brazil, and super interesting stuff. And maybe too much information for the listeners, but my point is that if everybody signs up for Waterline, you'll get the notifications when these reports are available. All right. Well, anything else before I let you go? It's Friday. The weather's beautiful here. It's probably lunchtime for you. So anything else?
No, not much. I mean, hopefully we can get published more stuff and I'll come back soon. So
yeah, that's what it takes. For all the people at Bluefield Research, if you want to be on the podcast, publish research. All right. Well, Antonio, thanks a million for jumping on. I really appreciate it. This was interesting, and I like this research note. So if anybody's interested in this research on TAQA, GS Inima, Spanish markets, Germany, like you said, you can always just reach out to us at waterexperts@bluefieldresearch.com, and Antonio can hook you up with some insights. So, all right, Antonio, take it easy. We'll talk soon. All right. So I really like that conversation because it was just a conversation. It's kind of how we talk about things in the office. But I also like this research note that Antonio put out because TAQA's move for GS Inima really does drive home three things. Acquisitions is a growth lever in the water sector. Pushing into new markets from the Gulf to Brazil to Spain is super interesting. So the build out of a global player and where that goes. And then putting water infrastructure at the center or a big part of their strategy. I think that's interesting. To me, that's a playbook, scale diversification, and making a water pillar of global growth. So with that being said, with Antonio and me, thanks for being part of the journey. And before we sign off, I want to recognize the team that makes these conversations possible. Mike Gaylor, Ryan Sullivan, Kelly Talbot, Steph Aldock. Without them, this podcast wouldn't make it past my own desk, which is where I sit right now. If you're in Boston, Barcelona, New York, Chicago, San Francisco, or Paris, reach out. We love to connect in person. That's what we do. And if you have any ideas for topics or things that you'd like us to tackle, send us a note. Always interested to hear what you're interested in. And if you enjoyed today's episode, the best way to support us is simple. Share it with a friend or a colleague who cares about the water sector. Also, I like friends. This podcast and these water industry insights have been brought to you by the one and only Bluefield Research. To learn more about us, visit us at bluefieldresearch.com. Until next time, be well, be safe, and take care.